Hi, and welcome to the market alert for Friday the 31st of October 2014. Starting off with the 5-minute chart for yesterday's session, you can see we had the high impact news item earlier on before the market opened. Yellen was speaking once again, as I warned in yesterday morning's market alerts. So we see the market's reaction moving sharply to the upside. The market taking out the 17,000 area again. So again, as I said before, this is a major support area for the Dow. The market immediately trading up 50 points to 17,050 there, finding a bit of resistance, but then managing to drive through. We've got some selling pressure here. Let me just describe what selling pressure is briefly. If you look at the volume, it is far higher than the previous bar, but the range of the bar is narrower. So you've got the same amount of energy being forced into the market, but the market's making no progress. We're at a psychological level of 17,050. This tells me that there is some selling around at this level. Otherwise, the market would have just carried on straight up like it did in the previous bar. So obviously there's some sort of pressure in the market there. So the market then has another look through, manages to get through. We see new buying coming through, which is what you want to see going through a resistance area, and that's precisely what we see there. And then a bit more potential weakness there. Again, you've got that selling pressure this time at the high of the previous day. The market putting in more selling as it goes through and heads up towards the 17,100 psychological level. And then we see the market run out of steam, back through the 17,050 with selling, that's the red bar, and then the market trying to come back. This market doesn't like to go through these areas without coming back and having another look. So it's just playing with it, but banging its head against the resistance there, managing to get through in this bar, but trading up to the previous day's high. So you can see this pattern, and very easy to predict how the market's trading between these different psychological levels. The high now giving this market some grief. The market's dropping off volume wise, and you can see we've got into a sideways pattern. We're pushing through back up to the 17,100 level there. Again, notice how it traded through but failed to close through. We see the first increase in volume here as well. Again, having another look through, the volume's dropped off, and if there's no buying to support a market, it will be pulled back eventually. So there you go, you can see now the market's moving higher, and now we get a buy signal. So the market's sort of mid-afternoon, late afternoon, and you can see that I'm just rescaling the charts. The trade's set up, the trade is filled. You see that on the right hand side with it being qualified at 1600. And of course, the good thing about this trade, if I just stop here for a second, we've got a buy signal just above the 17,100 level. Now, because the stop loss is so close, what could have happened here, which didn't, but as soon as I saw this, I thought I'm going to play this one slightly different, and I would move the stop below the psychological level and reduce the bet per point to still account for the sort of percentage risk that I'm prepared to have on this trade. So what I would do is give the market more room to breathe by moving the stop lower below this area where the market found support and reducing the bet per point so I could stay in the trade, because it's very unusual that the market didn't actually come back and hit this stop at the psychological level and retest it, which is what we've seen, you know, here, and there it came back through and then went back through. Oops, let me just move the chart back. And so that's what you know, an idea. And again, it's something that comes with experience. You know that this market's going to play with these areas, so you may want to move the stop further back and thereby reduce the percentage risk by moving the bet per point down from, say, like £5 down to £2 or something, so that it meets the sort of 1 to 3% risk on the trade. So that's flexible. You can actually move these and still trade in on the basis of what you see, to actually be more flexible, give the market more room to breathe, because there is an expression in the market that most people lose money trying to avoid losses. So you have very tight stops, but then the stops are taken out, and each time this happens, of course, you keep losing and losing and losing, and you bleed to death slowly. So sometimes you're better off betting less, having a bigger stop, allowing the market to breathe, because, as I've said for the last week and a half or 2 weeks since we got to the bottom of this correction, this market is a buyer's market. It's a long market. It is a V-shaped correction. We have seen this time and time and time again. The pattern never changes. So we know that the long side is the best side, but sometimes with volatility you need to give it a bit more room to breathe. And you'll see in just a moment how the market came so close to this stop. This order doesn't know that that psychological line exists, although I'm in the process of trying to write all of this into the software so that it does, and thereby being more dynamic in that it would actually move the stop based upon the psychological levels. So we see the market coming back there. We're down 20 points at the moment, and then the market comes off the low. Before we know it, the market starts to move to the upside. We get a potential sell signal here in no man's land, as I'm calling it, because it's in the middle of these two psychological levels, unlike the sell we had yesterday where it appeared and the entry price was below the psychological level. So this one isn't filled. You can see there it becomes unqualified because this market's bullish. We're now at last trying to get above the entry price, and I'll just wind this forward so you can see the market eventually going through. And as I've said before, what does the market need to drive through these psychological levels? We need to see new buying coming into the market, and that's exactly what we see here. Big driving bar going through not only the 17,150, but also the previous, sorry, not the previous day's high, the resistance 2 level there as well in the pivots. And you can see the buying at the bottom there. That's what you want to see. Now, also here, we've driven through the scalp. This is your first clue that this market's got momentum as well. So any bar that drives through a scalp level on the upside with the buying bar, a green bar, and a red bar on the downside, a big wide bar, tells you this market's got some momentum. That's the clue for holding the trade there. So to see the market moving, we get a bit of selling pressure coming into the market again. You see this situation. This is what follows buying. You can get selling pressure and all sorts of other potential weakness. So we've got selling pressure in the market. As long as the market doesn't close below the low of this bar, I know that we're off to the races. So now you see me moving the stop up 100% below the rising lows here, above the scalp level, locking in some of the profits. And what I'm looking for is the next psychological level of 17,200. And at that point, I was running out of time. I had to go and see a friend in hospital. And you'll see when we get to this sort of area, I'm playing around with the chart, just seeing where we've got, what we've got to the upside, if there's any chance of staying with this before going out, see what I could do. But in the end, I just decided to take the money at the psychological level, and you'll see the market then coming back to that psychological level. No surprise there, as we've spoken about before. You can see it just trading slightly below it, coming back down to that first 100% extension there, just basically running out of steam after the market's moved up 200 to 300 points in the day. You see the market testing there. We get another buy signal there, but we're getting late into the session. We've had the good trade, and there you can see that one being stopped out as well. And the market coming back to that psychological level again. You can see how the market's trading between all of these bands. It's quite amazing, but also predictable. So that's the trade for yesterday. Certainly a good 50 points on the table, if not more, at its peak, which of course you're never going to pick unless you're using a psychological line, of course, as I did in the sell trade yesterday and showed you how to take the profits when the market traded to that level. So the peak is around there. You're looking around 89 points on that trade, but it is in between the two psychological levels. And had I been here, I would have been looking for the market to go towards the R3, which it didn't. Right, let's move on and have a look at the daily chart and also see what economic news we got out for today as well. Well, here's a surprise, because if you look at the price chart, we're back at the all-time highs on the overnight market. The overnight market has traded quite vigorously. This is yesterday's price bar, trading through and up to the target prices to the left there. You can see these sell bars. I showed you how to mark these up the other day. 17,231, and on the overnight market, the market's gone through the 7293, and at the moment is trading through the all-time high of 17,361. Mission accomplished. The traders have done what they always do, shaken the market out. The implied volatility doubles. Every time this market's done this during the last 20 years, this has been the net effect of once that implied volatility is doubled, the market has gone back to the all-time highs. It's never ceased to amaze me how this happens all the time. So now we've got a situation where, as per the manual and the trading plan video where we discuss this, the market has completed its V-shaped correction. So I'm just going to scrunch up this and just show you the same pattern time and time again. V-shape, 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 bit more of a prolonged one there. Again, down, V-shape, up for a while, down, V-shape, and you can see them inside of here. These are just the bigger, more exaggerated ones. So we had this big one recently, and now it's a case of this market's likely to trade higher for a few days, and then we're going to get a pullback in the market. So it's a very difficult one to call for today, because the market's already at the all-time highs. And I put on a lot of points on the overnight. So let me just reset this chart, and let's have a look at how many points we've actually got on the overnight already. So we've got 250 point rise in the Dow, that's ballpark, already on the overnight. So there is a case for this market already having reached an exhaustion point, unless it's going to sort of double that today and put in 500 points as it goes to the top. That wouldn't be a bad thing, actually, because that would show that there was some exhaustion in this market, and again give an indication that we could see the market pulling back over the next few days. The other thing, of course, that can happen is that during the morning session, the late night session in the US, that this actually pulls back and then goes back up during the afternoon session from 1:30. So it's just a matter of waiting and seeing. Let's have a look at the news, see what we've got out today. We're only interested after 1:30. There is nothing else that's really going to give this market any grief. Got the revised UM consumer sentiment at 155. Market will have been trading for 25 minutes. That's forecast to come out the same. So it's a very difficult one to call, because you've got 250 points in the background already factored in, and the all-time high taken out. So will the market hold at 17,361? That's the big question. If it comes back below that during this morning session, as I said a few minutes ago, then we could see the market have another go to the upside there. On the implied volatility front, down at 11.56. This is amazing. We've got a reverse V, which we would expect, of course, given the dramatic turnaround in the Dow and moving higher. What's even more curious is that the bond buying program has ended, not necessarily officially, but we've been told that it's ended by Yellen. And yet this market's going up, and it's the Ponzi scheme that's been held up with the bond buying. So I think what we're doing and what we're seeing here now is a manipulation of the market to bring the market up to suck in a lot of people and dump the stocks on them, knowing full well that this can't hold for much longer because of the bond buying program being ended and the QE obviously being run down completely to virtually non-existent at the moment. So we'll wait and see. We will wait and see. So 11.56, and you can see that in the chart there. If it drops back down towards the 10, down to these levels, 8, 9, 10% area, then we can expect a further correction as well. The historical volatility, the blue line, needs to pull back as well. Right, that's it for me. That's it for this week. I will talk to you on Monday. Have a great weekend. As ever, thank you for your support. It's very much appreciated. It's been a good week. And let's hope today finishes off with another good result as well. So thanks for watching. See you in the next one.